Hey guys, I'm back here with my second video. In this video, I'm going to be talking about the current situation with Bitcoin, what we're looking for here, and I'm also going to go over the four major scenarios that I talked about in my first YouTube video. So if you haven't seen the first one, I highly recommend you guys go watch that before you watch this video. I'm going to talk about each of those scenarios, where they stand at this point, and then I'm going to focus on what I think is still the main scenario that we need to be looking at. So I'm going to start off with the bearish triangle scenario, which, as you guys know, this is my primary count. It has been my primary count for a few weeks now. Prior to that, it was the flat count that was there earlier, but this has been my primary for a while, and it's still valid. Also, if you think the chart looks a little bit different, it's because of a bad habit of editing these charts and then saving them on accident, and then they get messed up, and I don't have enough slots to save any more charts on TradingView, so I have to keep remaking these charts. So I just redrew this chart out, so it may have some different colors or look a little bit different, slightly different from my previous chart, but the count is the exact same. The one thing I did change here, I did make this a descending triangle, and if you guys have been following me on Twitter, you know that I pointed out about a week ago that this symmetrical triangle could actually be a descending triangle, and I posted that under the thread of my pin post, and it looks like that is now come to fruition, because with the current dip, the symmetrical triangle, the boundaries have been broken. I would not call this a symmetrical triangle anymore, which means if it in fact is a triangle, it would have to be a descending triangle. So from here on out, we're going to go forward assuming that this triangle is a descending triangle rather than a symmetrical triangle, like I talked about in my first video. So going on from there, we're looking at this count here, and it's still valid. In my tweets, I've been saying, hey, watch out for 6.5. If we dip into 6.5, it's still okay, but it should be a quick wick into that, and then we should bounce. So if we actually zoom in here, the correct level that we should be looking at is not actually 6.5, it's slightly lower. We're looking for a dip at 6.45, so $6,450. If we dip down there, it's not a problem. Don't panic. If we dip down there, it's still possible, and it still keeps this scenario very valid. All right, guys. So now if we do have the scenario valid, if we don't dip below that 6.45 level, the next thing that we need to do is we need to make sure that this structure here makes sense for a triangle. So like I said before in my first video, triangles don't necessarily have to have ABC waves. These waves within them can be double or triple combo waves, as I said before. So when I took a look at this wave, in order for this to still be a triangle structure here, this wave has to make sense. It looks a lot like a 5-wave impulse right now, and if it was a 5-wave impulse, it would invalidate this entire triangular structure. So I checked to see if I can make it make sense in any other way, and the only other way that I could make sense of this wave, if it wasn't a 5-wave impulse, would be as a triple combo correction. So triple combo correction would be a WXYXZ correction, and it's going to look something like this right here. So we have our W, X, Y, X, and Z, and let me just zoom in on that so you guys can get a clearer picture of what I'm looking at here. Alright, so let me just hide this guy here for a second. Okay, so the WXY structure, let me make sure I've drawn it correctly here. Yeah, so I have this as my WXYXZ structure, sorry, not WXY, WXYZ. With this first structure here being an ABC structure for the W, our X wave is going to be this little structure right here, and then we have our Y wave, which is another ABC wave, our X wave, which actually comes up to here, and our final Z wave that should bring us down here. So just to explain this to you guys a little bit more, some of you aren't as familiar with these more in-depth wave correction counts and stuff like that. A triple combo correction is basically 3 corrective waves strung together with 2 of these connecting X waves that you see right here. So you guys are familiar with the simple ABC corrective wave, which I've shown you guys in my charts many times. It's going to look something like that. That's going to be a simple ABC corrective wave, and the subwave count is going to be a 5-3-5 structure. A double combo correction would look like this. It'd be a first corrective structure complete, so an ABC, a zigzag, or a flat structure as well. And then it's going to be connected by an X wave here, a little X wave. Now the X wave also will take a corrective structure. So the X wave, for example, can be another little tiny ABC, or it can also be a flat, but it just has to be some through wave structure. And then that little X wave is followed by a second larger corrective wave, like another ABC, we get right here. And this whole structure would be labeled a double combo correction, and the labeling would be as such. Our first ABC would be the W wave. Our smaller little corrective or connective wave would be the X wave, and our third larger structure, in this case another ABC, would be the Y wave. So this would be a WXY double combo correction. Now what I'm seeing here is not a WXY, it's a WXYZ, and that's simply adding on another correction, the third correction here. We will get another X wave, and then we'll get a third and final ABC structure. And this triple combo correction is the most complicated structure in Elliott wave analysis. This is as complicated as it gets. Now, remember, within these waves here, we have subwaves and little subwave structures. And normally when I'm going for a count, I'll count those subwave structures. I'll make sure that they make sense. And I don't always show it here because it gets super complicated. And it's going to take a long time for me to show you guys all that in a video. But when I've come up with this account, rest assured, I have checked the subwaves to make sure that they are valid. And that's when I've come to this conclusion. So assuming we do dip down below the 6.45 and we get any sort of a significant close below that level, then we'd have to throw out this triangle count here. It would no longer be valid. So the only alternative then is to look at the other scenarios that I have, starting with the bearish non-triangle scenario. So assuming that we are not in a triangle, we'd have to look at this scenario. And the reason why I'm not too worried here, a lot of people are saying, hey, you know, should I be setting stops here? Should I be worried about this dropping down to those sub 4K levels now? No, not quite yet. A lot of people are calling for 5.5 and 5.8 right now, and I don't think it's going to happen yet until we get some sort of a significant bounce here for the following reason. So assuming this is a 5-wave impulse structure here, let's just look at it a little bit more closely. So if we're going to count it here, we're going to make it a 5-wave count. And it's actually a really clean count here that we can come up with. But it's going to look something like this. And if we zoom in a little bit closer, you can see the clear 1, 2, 3, 4, 5 waves of this first impulse wave structure here. We have our A, B, and our C right here to make up the second wave. This third wave is going to be a little bit tricky, but I am counting it as a 5-wave structure with an extended first that comes down to somewhere here. And then we have a 3, 4, 5 right there. And then we have this fourth wave, which actually goes up to here. And then we have our fifth wave, which is going to be another 5-wave impulse structure that brings us down. Right? So the key here is that, as we know in Elliott wave rules, the third wave can never be the shortest wave. It doesn't have to be the longest. A lot of people make this mistake. It doesn't have to be the longest wave. It just can't be the shortest. So what that means in this case is that our first wave, our third wave, we can clearly see is shorter than our first wave. And I can take the measurements here and show you guys that this first wave here is clearly longer than our third wave. There's the measurement of it. And as you can see, the third wave doesn't even get to 90% of the first wave. So the third wave is clearly shorter than the first, which means that our fifth wave that we are currently on right now has to be shorter than this third wave based on Elliott wave rules. So if this fifth wave has to be shorter than the third wave, let's take the measurement of this third wave here to see what the lowest we can go on this drop is. And according to this, the lowest we could go is $6,250 for this drop. Now, that's assuming this is a 5-wave impulse. And we already realized that if this isn't a 5-wave impulse, then it's most likely that triangle, and it's going to be a triple combo structure. And if it is a triple combo structure, then we should bounce off the 6.445 level anyways. But assuming we lose that level, let's say we lose 6.45, what's the alternative? The alternative is that we have a 5-wave structure here. And as I just showed you guys, the absolute lowest that this 5-wave structure can go without a significant bounce is to this level right here, 6.2. So I'm not expecting anything lower than 6.2 at the absolute lowest, which is why I'm not too concerned about setting stops under 6.5 where I've loaded up, or 6.6. So what to do in this case, like always, I could be wrong. I'm not always 100% correct. So if we do lose 6.2, if we lose 6.2, then that means that this is no longer a 5-wave structure. It also means we're most likely not going to be in a triangle. So at that point, what I would do is I may hedge my longs with some shorts. I'm not going to get out of my longs. I'm not going to set stops for my longs because a bounce is due. A bounce is imminent. RSI on the daily is oversold. Some sort of bounce is going to be happening soon. So I'm not going to let go of my longs. I'll just hedge with some shorts if we lose 6.2, because at that point it means that something's happening that I didn't see, something's happening that I didn't expect. And so I'll hedge with the shorts at 6.2, and then basically I'll just set in order to cover those in case we pop back up and we bounce. And then my longs will be back in the money. So what I would recommend to people who are asking me if they should set stops on their longs, I would say don't necessarily do that yet. If anything, just hedge your long positions with some shorts in case we lose 6.2, that being the absolute lowest we can go in any of my scenarios before a bounce. Hedge there, and then when we do get the bounce, you can close your hedges at break even, and your longs will be back in the money, and you can get out of some longs at that point if we need to, or if it's a stronger bounce, you can ride them up and take some profits once we do bounce. So that being said, if this is a 5-wave structure and if 6.2 is the lowest that we go, we should bounce up for a wave 2, followed by a wave 3, a wave 4, and then a wave 5, which will get us to the conclusion of this correction and those sub 4K levels. So the bounce, assuming we know that wave 2s tend to retrace 50 to 60, 1.8% of wave 1s. So let's say our wave 1 does happen to extend to 6.3K levels, right around there. Even if it does extend to 6.3K levels, then a fairly conservative bounce would be the 23% retracement, which is super conservative for a wave 2. They tend to retrace 50 to 61% a majority of the time. But let's take the most conservative estimate of 23%, and that gives us around 7.15, $7,150, at which point, if everything's looking super weak and we somehow get a super conservative wave 2, you can get out of those positions that you got into from 6.7 to 7.2 if you followed what I did, and you'll get out. You'll actually make a profit, because assuming you stack those orders, everything below 7.2 you'll make a profit on. You'll take a small loss on those orders that fall to 7.2. That is the most conservative target for wave 2, though. We would expect it to bounce up to 7.6 or 8,000, or even at the 61.8% retracement, 8,500, which also actually looks like it lines up pretty well with that triangle structure. But at this point, with this structure, that triangle's out anyways, but you do have that trend line coming down from there that it may bounce off of. So I'm not too concerned about losing 6K here. A lot of people are worried. I'm not. Like I said, we're most likely going to bounce at 6.45. If not that, then we'll bounce at 6.2 at the lowest. And if we do lose that, then I'll have to reevaluate. But up until that, I'm not concerned. I'm holding my longs, possibly hedging with shorts, but that's about it for now. So now let's take a look at the other possibilities here. So if we do happen to go below that 6.45 and our bearish triangle scenario right here gets invalidated, we also lose our bullish triangle scenario here. They both get invalidated at the same time. They're both triangles. If it's no longer a triangle, both the bullish and the bearish scenarios are out of the picture. So that invalidates this scenario. That invalidates this scenario if we lose that 6.45 level. So what's left? Well, we have this bearish scenario that we just talked about right now, which has us bouncing for sure before we hit sub 6,000 levels. And then the other alternate scenario is going to be this bullish non-triangle scenario that I talked about again in my first video. Now this scenario gets invalidated as well if we dip below this low point here. We know from Elliott wave that wave 2, in this case wave 2 right here, cannot retrace more than the start of wave 1. And the start of wave 1 here was right about 6.46. So actually, if we lose 6.45, it actually invalidates this scenario and it invalidates both of our triangle scenarios, which leaves us with just this bearish scenario and this bearish count, which means that we're definitely headed lower if we lose that 6.45. So I guess the level here to watch is 6.45. If we lose that, then we're definitely headed lower. The question then becomes, where will we bounce? And we already know it's going to be before 6K, so no need to panic there. At that point, if we do lose 6.45, I'll probably let go of my longs on the bounce, flip them to shorts, and then catch the big wave 3 down. So that's it for today, guys. If you enjoyed the video, please like and subscribe, and I'll catch you next time.